This week in economics on the 31st of March 2018. Numbers man here from WBRN Radio and on the Bostonred Network. When we originally started this particular production, Numbers Man, we just chose the word numbers man. It has nothing to do with sexism, etc. It's just one of those things that you come up with when you start talking about 9 years ago when we started this out. And now we're on the iHeartMedia. That's where basically you can find us. You can also find us on Stitcher for your mobile devices. Many people access us by mobile devices on Android, on iOS. That's the Mac platform. On Linux, you can on particularly anything. The RSS feed is there. We use Speaker, their platform, and then we are, as they say, farmed out to various other platforms. You can find us on many of the voice-activated speakers. Get her in a minute here. From Echo and various others of the Google devices. Supposedly we're at Google Play. I need to check and see on that particular one that we are there. But if you are on a mobile device, if you use Stitcher, you can access us there. Or you can access us at iHeartMedia under Numbers Man. And they have a nice app there also from your mobile device, your desktop, or your pad from the Android or Chromebook, actually. So it doesn't matter. All you need is a basic internet connection. Nonetheless, let us get on with this. Happy holiday season. The markets were closed in the U.S. For Good Friday, one of many holidays here. And we're coming up on the Easter/Passover there, and happy holidays to those. And on Sunday we have All Fools Day. So we have something for everyone this weekend, no doubt about it. We have updated numbers from China and from the U.S. We'll go to the Bureau of Economic Analysis and we will impinge this on. This is a national income and product accounts, domestic product, fourth quarter, the third estimate, and also corporate profits. Nonetheless, real domestic product, GDP, increased at a rate of 2.9% in Q4. That's 2017, according to the third estimate released by the Bureau of Economic Analysis in the third quarter. Real GDP increased 3.2%. So there was a good third quarter and Q3 and Q4 of 2017. And we'll look at, I don't have it, but there is an IDF global type of estimate of Q4 out there. And in most places, Q4 did in fact rise. We have the latest Chinese PMI, and their forecast, we'll get to that later, however, is based on more complex source. That's always when you get the third estimate. Real gross domestic income, GDI, increased at 0.9 in Q4, compared with an increase of 2.4% in the third quarter. The average real GDP and GDI, a supplement measurement of the U.S. economic activity that equally weighs GDP and GPI, increased at 1.9% in Q4, compared with an increase of 2.8% in Q3. So Q3 was our best quarter. Reference here, the increase in real GDP in the fourth quarter primarily reflects positive contributions from PCE, non-residential fixed income, exports, residential fixed investment, state and local government spending, federal spending that partially is offset by negative contributions from private inventory investment imports, which are subtracted. The deceleration in real GDP growth in Q4 reflects a downturn in private inventory investment that was partially offset by acceleration in PCE, exports, state and local government spending, fixed, non-residential fixed income, federal spending, an upturn in residential fixed investment. Current dollar GDP increased at 5.3%. Our 253.5 billion in Q4 at a level of 19,754,1 billions in the third quarter. Current GDP increased at 5.3. Our 250.6 billion. The price index for gross domestic purchases increased at 2.5% in Q4 compared with an increase of 1.7 in Q3. PCE price index increased at 2.7. This is something the Fed looks at compared with an increase of 1.5 in Q3 excluding food. So if we look at the whole balance here, the advanced estimate of real GDP was at 2.6, and then we had the second estimate at 2.5, and the third at 2.9. Current dollar GDP was at 5 on the advanced estimate. The second was 2.9, and we finally at 5.3. And GDI at 0.9%. The average real GDP and real GDI was at 1.9%. I'm just looking at the table here. And gross domestic purchase index was on the third was at 2.5. And PCE price index at 2.7. It was 2.8 on the first estimate. On the second, it remained 2.7. The increase in GDP in 2017 partially reflected positive contributions from PCE, non-residential fixed investment, and exports. These were offset by declines in private inventory investment. Imports are subtracted there. The acceleration of real GDP from 2016 to 2017 reflect upturns in non-residential fixed investment in exports and a small decrease in private inventory investment. The movements were partially offset by deceleration in residential fixed investment and in state and local government spending, imports, etc. Current dollar GDP increased at 1.4%. Our 766.1 billion in 2017 at a level of 19,390 compared with a 2.3%, or 503.8 in 2016. So you can see 2017 was a good year. The price index for gross domestic purchases increased at 1.8% in 2017 compared with an increase of 1% in 2016. During 2017 measurements from Q4 of 2016 to fourth quarter of 2017, real GDP increased at 2.6% compared with an increase of 1.8% during 2016. Profits from current production as corporate profits with inventory valuation adjustment, capital consumption adjustment decreased at 1.1 billion in Q4 in contrast to an increase of 98.2 billion in Q3. Profits of domestic financial corporations decreased 14.6 billion in Q4 in contrast to an increase of 47.8 billion in Q3. Profits of domestic non-financial corporations increased 19.4 billion compared with an increase of 18.4 billion. The rest of the world's profits decreased by 5.9 billion, in contrast to an increase of 32 billion. In fourth quarter, receipts increased at 14.9 billion, and payments increased at 28.8 billion. In 2017, profits from current production increased at 91.2 billion, in contrast to a decrease of 44 billion. That was in 2016. Profits of domestic financial corporations increased 15.7 billion, in contrast to a decrease of 2 billion. Profits of domestic non-financial corporations increased to 37.4 billion, in contrast to a decrease of 57.7 billion. The rest of the world component increased at 38 billion, compared with an increase of 9.8 billion. And now, as we finish this up, the 2017 Tax Cuts Jobs Act includes previous provisions that impact business income and personal income statistics in the national income product accounts. The provision did not impact corporate profits for current production or GDI, but import net cash flows in fourth quarter of 17 there. So there is a technical note on this. And let's see if we find it. Well, we didn't. Anyway, nonetheless, average revisions without regard. Oh, I see. A technical note here. I'm looking for it. I guess we. Well. I will go to the technical note. I don't think this will, I'm not certain if this will impact what we are doing here. Fourth quarter, third estimate. We are live. Update to real GDP. Third quarter, real GDP increased 2.9. I think we went through that once before. The revision to consumer spending for services was primarily to transportation services, reflected in newly available and revised data from the census people here. Let's see. From the Census Bureau Quarter Service report. So, we would get to this. The impacts of tax cuts are there. Fourth quarter change to expensing bonus depreciation and one-time deemed repatriation of tax went into effect. Bonus depreciation law provides for full expense of qualified investments placed in service after the September 27, 2017, before January of 2023. It increased from 500,000 to 1 million there, and one-time deemed repatriation tax. The new law imposes a one-third deemed repatriation tax on accumulated foreign investments. This tax is recorded as a capital transfer from business to federal government of 250 million and a quarter rate of $1 trillion. Anyway, that is the technical note. So now we have gotten past the technical part. We'll go to the Reuters Bloomberg lineup. Here we have these two lineups that distinguish as those two. And let's see. Well, we'll start with Snap. Snapchat. The parent company is Snap. Anyway, they're down 7%. They are cutting, 7% of their global workforce in March. So I suppose they have cut that down. The social media company would incur a $10 million cash expenditure due to severance costs to reflect current quarter ending today, actually, March 31st. As a result of layoffs, primarily engineering and the sales team, the company said it sees a savings of $25 million in 2018. The company has 3,669 workers. That was as of December 2017. So it's basically one of those companies earlier that the company would cut 120 engineers and reorganize the engineering team. So a lot of engineers are moving out there. One of the interesting things about the tech sector, many of these companies, with the exception of a few, are relatively small in their base, just a few thousand of workers. So when you look at the tech economy, it is a little bit different there, period. And Reuters says on investors, nervous stock investors are hoping an unusual U.S. Strong earning season could restore some of the optimism. Well, that is in the psychology of the market period, imploding tech stocks, and that will be ongoing. We look at the Facebook controversy there. The leader of Facebook will testify before Congress, but a lot of this damage has been done not only in the U.S. market but in the EU market with Cambridge Analytica out there and their data mining, data scraping, whatever you want to call it, of consumer information, and it really doesn't stop there. There are many more little baby type of Cambridge Analytica working out there. So those things all impact this whole scenario with social media. Where does it go from here? It'd be very interesting. There are campaigns to delete Facebook, etc. Facebook has their stock has went down, 6 or 7%. I don't have the precise note here, but you can understand the gravity of this. Their stock, I believe, is at roughly 160 whatever at the present rate. And as Facebook goes down, more realization of where they actually are, you'll see Google, Alphabet being affected somewhat by this. Tesla has already lost some value. So a lot of the value in the tech stocks, as other things, is irrational exuberance, primarily. So when we get back to a more realistic pricing, a little different situation. Also on petro, I notice we'll get to it on commodities, has been falling, at least at the tank. It has not been going up. There's now a glut. And this is one of the things that is happening here with commodities. Commodities, of course, again, it does fluctuate depending on the psychology of that particular entity and where the traders put it. It's purely a speculative market, and it's pegged to realistic market conditions are not as one would think. Period here. So nonetheless, back to Reuters here. There's no guarantee the worst is over. That's true. This is a comment from Reuters. A robust earning period would bring back focus on fundamentals. Well, part of the problem here is there's a distortion of market fundamentals. What you observed in February were, in fact, the new market fundamentals. Now, what they are talking about is a past trend that does not apply now. Even if the market rebounds, you have new market fundamentals coming out there, and this is a problem that analysts face, and very, very serious problem here. With this year's sell-off, rising profit forecast, well, again, that's in terms of shorts and puts. Anyway, we won't get into that one. Stocks are near the cheapest price to earning basis that they've been since 2016. That doesn't mean very much. 2016, they were priced. S&P is trading at about 16.5 times forward earnings, well below the 18.9 level it was in mid-December when it was overvalued. So there is a correction here in early February. The route, they talk about it. Most recent, the selling followed worries over a U.S. trade war with China. Again, this is all a globalization. And according to David Morgan, he's a senior portfolio manager at Cisnobus Trust Company in Atlanta, Georgia. We have been catching up with all these things that could happen and may happen, and that the sky is falling. But once earnings season kicks in, the headline news and the steals away from some of the negativity. Well, there is a pessimism that could come on the market. We saw that in the administration of Barack Obama, that the media created a very pessimistic environment when the quote-unquote so-called fundamentals were actually very good at that time. So there's a little different kind of situation here when you start getting into fundamentals. What are the fundamentals, and what are you actually talking about? Are you talking about quote-unquote market fundamentals involving exuberance there, or are you talking about basic fundamentals, say, from a decade past? So you have to be very, very clear what you're talking about and what those market fundamentals are. Because in the globalized economy, you actually don't have fundamentals. If you look at the semantic workup of quote-unquote the term fundamentals, you're talking about different things. Because the market has changed drastically since a lot of people look back. In fact, some of the policies now are the same of Ronald Reagan. In the 80s, as far as tariffs, as far as tax cuts, how do tax cuts affect the overall economy? Some of that particular results of tax cuts, as far as workers' paycheck, little with some, but again, and after we are approaching April 15th, we're not there. That the filing deadline, most people would have filed by April 15th, but there are delays in the return of refunds. And also mid-February on a new law, reductions for workers are filtering in. Some companies were on it immediately. Some others have not really started to get their new withholding tables. Have not activated them. We'll say that they have them. And you'll see that happening now that March is over. So in other words, basically, if you look at it, mid-June, of the last of June, all of this would have matriculated through the lens of this economy. In other words, your tax refunds will basically be back in May, middle of May. Most of them will be there the 1st of June, definitely. Your withholding tables will have been activated by businesses. Workers would have received several weeks under the new regiment. So then you can start to measure the economy where it is. But again, consumers have been very, very stingy. The volatility index here, the VOX, widely followed. The barometer is near team up down for the S&P 500. The VOX is at 2.5-year high. It's at 50. It was above 50 in early February. I don't know where it is right now, but and they didn't deem. Well, wait a minute here. This is the corporate tax rate slashes to 21. I think we talked about that. The first quarter S&P profit forecast is 6.3% since the 1st of January. While the forecast for all 2018 is 7.7%. This is based on Thomson Reuters data. Many companies already announced plans for increased buybacks. And this is basically what you're getting out of this new tax regimen, is buybacks. And dividends are bringing cash back from overseas repatriation. We talked about that. More news on that front's expected in the reporting period, which is set to start with J.P. Morgan Chase, and others it'll be mid-April. If we discuss repatriation, what companies are going to bring it back, will have a positive effect on the market. Well, if companies bring the money back and just they're doing just buybacks, so they're not investing in the economy, that solidifies that company, but it doesn't do very much for the national economy. That's been a big argument there. From Reuters now, this is the Chinese March factory growth is stronger than expected, the official PMI. From Beijing, authorities lifted winter pollution restrictions. Steel mills cranked up production. The official Purchase Managers Index released on Saturday at 51.5 in March from 50.3 in February. The magic mark is at 50. The Reuters people had projected at 50.5. They were off 1%. Finding added a growing amount of data which suggests the Chinese economy carried momentum into Q1 from last year. Van analysts had expected. That's basically the same thing that's happened in the U.S. February's print has been the lowest in 2.5 years, but many analysts suspect that was due partially to disruptions related to the Lunar New Year holiday. The March survey shows manufacturing has shifted into high gear as usual as season demands have picked up at home and abroad. The sub-index for output jumped to 53.1 from 53.3 in February, while total new orders rose 53.3 and 51. Exports climbed to 51.3. The Chinese Information Center, Logistics Information Center, said it expects first quarter economic growth to be about 6.8. Early this year, economists polled by Reuters in a fail to around 6.6%. Larger companies saw modest pickups in growth. Smaller firms' activity expanded marginally after shrinking in February. Stress tests show that the new U.S. tariffs will have a relatively small impact on Chinese steel. Chinese steel firms that should not be overly worried and should focus on guaranteeing demand for domestic. And this is the whole and major exports, which the U.S. is not one. But it's worth noting that the amount of steel produced we supply to U.S. consumers through global supply chains may well exceed direct exports to the U.S. Now, this is a different situation there, supply chains. And from the Bureau of Statistics of China, various releases here. Industrial production in the first 2 months of 2018, profits made by industrial enterprises above a designated size of 968.9 billion yuan on year-over-year basis, increased at 16.1%. The first 2 months of profit of state holding enterprises above the designated size of 291.81 billion yuan, an increase of 29.6% year over year. That a collective owned enterprises reached 3.969 billion yuan, an increase of 2.8%. Of the joint stock enterprises stood at 682.95 billion yuan, up by 21%, and of that foreign funded enterprises and enterprises funded from Hong Kong. Taiwan achieved 225.96 billion yuan, an increase of 2%, and that of private enterprises gained 293.8 billion yuan, an increase of 10%. The first 2 months, profits of mining and quarrying reached 877 billion yuan, an increase of 42% year over year. First 2 months, 41 branches of industrial divisions, industrial profits of 29 industrial divisions increased year over year by one, of remaining the same level of 11. And let's see what else we have here in this. In the first 2 months, year to be January, February, the cost per 100 yuan turnover of principal activity stood at 83.98 yuan, a decrease of 0.33 yuan over the years. And they lay out here the increase, say mining, where it increased here. Total increase was 10.1% there, and see what else we get from this. We'll append this on. I won't go into all of this particular stuff, but it is delineated out in a more detailed manner. Manufacture of plastics and all kinds of things. Let's throw out one of these non-metal mineral products. 16.3 of medicines, 18.1, and this is a layout of many things here. Furniture 9.5 is the increase. There some of the things that are going on. Cigarettes and tobacco, 21.5%. That's not a welcome thing. Wine, beverages, 10.3 percentage increase there. And basically we're talking the same layout here. Manufacturing of electrical machinery and equipment at 10.11. That's the increase there. And a nice chart laying out things. Manufacture of foods at an increase there of, let's see, 7.9%. Let's see. Processing of foods from agricultural products at 4.8%. Some of the increases here. Anyway, we'll append this and go to CNBC. Basically the same thing, nothing new here. We'll go back to the BBC and we'll get that number up here in a minute here. Oops. The BBC's big story is DJ's Trump attack upon Amazon and the deal that they have with the U.S. Postal Service. And anything else? That was a slow week there. Barclays paid $2 billion to settle a fraud case. A lot of these banks have been caught recently in fraud cases. Well, let's get to the markets here. We'll do the numbers and say the Global 30, this is on Friday unless otherwise noted, 0.05 or 0.5 was that? It was the Global 30. The FTSE All Share at 9.01. That was on Thursday. And we go to Amsterdam also on Thursday, 2.52. The DAC at 156.002. In Paris, they were at 36.86. In Brussels, 4.73. On Thursday, these are all on Thursday. In Madrid, at 46.40. On Thursday, in Zurich, a negative 15.16. Yeah. In Moscow on Friday, 3.84. In Johannesburg on Friday, negative 294.82. In Bombay on Wednesday, negative 206.71. In Karachi on Friday, 70.68. In Lahore on Friday, negative 45.11. In Colombo, the all shares there on Thursday at 36.58. And then Wednesday in Tehran, nice numbers there, 342.20. In Sydney on Thursday, negative 30.30. The Nikkei on Friday at 295.22. And the Hang Seng on Thursday at 70.85. In Shanghai on Friday, 8.37. In New York on Thursday also, they were closed on Friday, 254.69. And the Nasdaq at 114.22. The Merc, that's the commodities market at the Midwest city of Chicago, at 36.87. And in San Pablo on Monday, 1046.17. I always wonder about that number. And in Mexico, I'm not sure why, on Friday, they had, surprise on this, anyway, at 6.842 there in Mexico. So that is the markets. On to commodities. Start with Brent crude. Futures on Friday, up 58 cents at $69.34. The spot was down 58 cents at $63.83. The West Texas Intermediate crude, these are futures incidentally, it was up 56 cents at $64.94. Gold came back to earth. There's no increase there. This is from the Forex at $1,323.90. The buy gold was down 20 cents at $1,229. Silver, no change there, $16.28. On to Euronext Life futures. Why I choose those, I have no idea. Anyway, nonetheless, cocoa was down $3.94. And who else? Robusta coffee was also down $12 here. And white sugar futures were up $15.70. The Bloomberg Commodity Index, which came out on Thursday, at 87.47 there. So a little increase there. The Bloomberg Commodities Index, so commodities were up. And if we look at the change there, 0.71. Let me just make sure I rounded everything up here. There's one other item down here that we somewhere we're not finding it. Anyway, we had a PMI here for market, but that's not a big deal. I'm not sure what we did. Sometimes things get lost in transition around here. Let me just check. No. Just to make sure that, we don't have it. Anyway, not a big deal there. We had from Bloomberg. I'm not sure we still have the Bloomberg stuff up here or not. This is CNBC. Nah, we don't have it. Anyway, nonetheless, rounding it all up, holiday weekend in the U.S., you don't have a whole lot of information going on. But basically, we'll still, as one person's analyst said, we're in a transition, a lot of transitioning going on around here. The impact of the tax cuts, the impact of the tariffs, on various enterprises. It's not even negotiation of NAFTA. We haven't mentioned that, but they're talking now about the cost of labor, whereas labor is higher in some. This is between Mexico, Canada, and the U.S. Labor is high in some places than others, and they'll look at an aspect of that and further negotiation. The problem there is that Mexico is much, much more globalized, their economy, than, say, Canada. A lot of Canada is cross-border trading to the U.S., and, of course, they have their energy exports out of their Edmonton, Alberta area. They have fracking. They have all the negative things that you could come up. Those things are out there, and I suppose will continue to be out there. One of the items that we look at. But as far as the full impact, we don't have that, and that's why it's transitory. What we do understand is from consumers that in March and February, a lot of savings going on there, not much movement otherwise in consumers. We had a report, several reports here about consumers and where consumers were. There was a lot of spending in Q4, but in Q1, in January and February, that basically ceased to be. And the problem also in the automobile sector, you have an oversupply of SUVs. So some of those things are coming to haunt people. And in the real estate sector, another problem there. I talked about personal income state to state and how these tariffs will start affecting particularly agricultural states. A lot of Missouri comes to mind there, Iowa, a lot of corn, soybeans, that sort of stuff, which that market has been depressed for a while also. And how will the Amazon attacks reflect on Amazon? Amazon, 40% or more of their revenue comes from cloud services. So that in itself is a different situation. Amazon is moving. They're moving into groceries and various other kinds of things. Whereas at the same time, you see Walmart. We didn't talk about them yet, but Walmart thinking about close partnership or perhaps buying Humana, which is a healthcare conglomerate that is associated with some physician groups, etc. They're out of Kentucky. Well, one of the big deals here is what Walmart is planning to do is more closely associate Humana's 65 plus population and moving into Walmart. In other words, the idea is sell them medication, and once you sell them medication, you will be able to sell them other things in your store. That's an interesting stratagem based on the baby boomers. If in fact these baby boomers are say 62 or 65, what is their average life expectancy? 10, 15 years into their 80s. But what you're talking about is a very short-term stratagem. You have a lot of people now, of course, that are in their mid-50s that will be in that current group. But it is a 5 to 10 year stratagem which could fall apart in less than a decade. And then you have a lot of numbers with millenniums that you're into trouble. And this is one of the problems with the whole healthcare prospect. At this particular time, you have many of these drugs that are overpriced. DJ Trump has done some things, at least on Twitter, about Big Pharma in their pricing. But expect if there, once there are reforms in Medicare and Medicaid, that will affect a lot of spending on some of these pharmaceuticals. Grossly overpriced. It was noticed in the hemophilia type people. A little boy in California that he has both Medicaid and private insurance. Private insurance, I think, is around $200,000 they pay, but Medicaid for this boy has spent something like roughly $21 million. Some of these hemophilia drugs are very, very expensive, and they have increased 2, 3, 400%. Don't have the exact story up here now, but it's a very expensive situation, and very little states can do about that because, again, we talked about this during the Affordable Care Act under Barack Obama, that the pharmaceuticals and insurance companies controlled the cost factor. Now, if you move to single payer, then the federal government would control the cost factor there because they would be able, they're forbidden to do it now, but like the VA, they would buy many, many of the drugs in lots. So they would have savings of 30, 40, 50%. And they could also limit the exposure of some of these quote-unquote new drugs to more of a real pricing mechanism. Because you're going to have drugs anywhere you go. And at this point in time, Medicare is exposed to particularly some of the new diabetic drugs. I take one of those, and it is in insulin. It's not cheap anymore. A 3-month supply of that, of this particular one, I think is roughly about $1,500 depending on where. And this is a Medicare a payment, Part B or D or whatever it is. You have all those parts there, and through some managed care you pay additional money. Anyway, so much for that part of it. But that is to be expected, and those are some of the things we'll be looking at very, very carefully. This will do it for us. This has been This Week in Economics on the 31st of March 2018 from WBRN Radio and on the Bostonred Network. Happy holidays, whichever one you are observing, whether it be Passover, Easter, or tomorrow, All Fools Day. We have baseball season is finally back. Cubs lost last night. And we have March Madness. Loyola will be playing Michigan in one of the games. A lot of excitement will go there. And then you'll have the Kansas State Loyola game. The Kansas State Villanova game. Anyway, a lot of excitement going there in terms of the economics of sport. Very important there how much money it generates there, and what the TV contracts for the March Madness alone are over $1 billion. That's just a contract.